Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about Alibaba's shareholder earnings for the most recent quarter. Dylan and I are both Alibaba shareholders, in case you didn't know or you're brand new to this channel, which I kind of doubt, but that's how it goes. Anyways, we're going to dive into the numbers a little bit and talk about what I saw from when I looked at it.
Yeah, nice. If you like this kind of entertaining stock market content where it's two super guys trying to figure everything out, give us a like and subscribe.
Two stupid guys trade stocks.
All right.
All
What do you
right.
think? Is Charlie Munger going to be happy with what he saw this week?
I can't remember. He sold a lot of his stuff, right? Because he was
He
margined.
doubled down twice and then he cut back 50% once. So, there's been a lot of theories out there. Some tax loss harvesting may be part of it. But the background of this slide actually here is the 5-day chart of Alibaba. That was a pretty sexy green move in the middle of this chart, huh?
Oh, yeah, no, it went from like 85 to pretty high.
Yeah, it was like mid 90s. Yeah, about 15% move in a day, which was pretty good. In fact, it was so positive that the entire Hang Seng Index went up 3%. Nice to see these sort of headlines. Alibaba shares soar. That's not something you hear too often these days. It's
No,
been
it's usually the
pretty.
opposite.
Yeah, there's other things going on that were part of the reason why the whole Chinese market moved up. But we're going to talk a little bit about Alibaba here. We'll talk about global stuff too. But this is kind of the headline here of what the numbers look like. So, according at this time, it was 12% up for the stock that day. The 795 yuan, $1.18 per share, excluding items. Okay, excluding items, and it's 204 billion yuan. Both of those numbers came in above estimates, which was the positive thing, right? So the estimates were down here, 731 yuan and 199 billion in terms of revenue. So
Got it.
yeah, nice top and bottom beat, which is impressive. Unfortunately, they did have to exclude items. So what exactly does that mean? What does it mean when they exclude items?
They're trying to hide their investment in Rivian. Yeah.
That would be Amazon, but no, it's actually true. I actually did not look to see what marketable securities was that they had to mark down, but it was actually the same kind of thing. It was like about a 35 billion yuan loss from marketable security, price appreciation. Which it kind of is what it is. Warren Buffett talks about Berkshire Hathaway and how, unfortunately, under GAAP rules, they're required to include the value change in terms of their stock holdings, and it doesn't really represent the underlying business growth, which is what we try to focus on. At least I do. That's my thought process. When we look at
Right.
business. Some of the other things that kind of helped move the whole Chinese market, though, was this maybe question of softening on the zero COVID policy. That was one of the news stories. There was actually even another news story about it today. The a little scary thing though is you're seeing a split. I don't know how much you've seen this with the Chinese Communist Party. Xi Jinping, who's the president, and I forget the other gentleman's title, but he's like the number two in the Chinese Communist Party, have started to kind of diverge in terms of what they've been saying about this zero COVID policy. Xi Jinping is kind of doubling down on it, whereas this other gentleman is kind of pulling away from it, talking about how we need to stimulate the economy, how we need to relax restrictions a little bit. That they announced multiple points today in terms of how they're going to actually do that in terms of selling more cars, EV incentives, decreasing fees for businesses for the next several months. But they are trying to move towards a more accommodative financial policy in the Chinese government
Yeah, I
right
mean,
now.
as soon as your own economy starts getting hurt, then the kind of philosophy changes. Well, they've also done some real not cool things for. We won't get into that, but trying to, let's just say, dampen COVID.
Yeah, completely understood. One of the major highlights that actually, Alibaba talked about in this kind of earnings report right off the bat was that they broke 1 billion consumers in China in terms of annual active consumers. Pretty impressive.
Yeah.
1.3 billion total annual active consumers. Just ridiculous reach that this company has. Yeah,
Yeah, I mean, that's
crazy, huh?
gross.
Yeah, absolutely insane. In terms of the revenue, all right, this is kind of where the rubber meets the road a little bit. They did have this 9% year over year increase. Now, is that, how do I put this? I think that was reasonable when they look at the actual quarter there. You're talking about a 9% increase when they have all these COVID lockdowns and that sort of stuff. So the whole year was actually a 19% year-over-year increase. So
Yeah, so
much
the
more respectable.
19% is gross because they already had the 2020 giant increase, and then a lot of people thought like, all right, well then you're going to have some flattening. I don't think 9% in a quarter is still that's like really good. I think it's pretty
Yeah.
solid.
Yeah, no, I was definitely happy with that. You know, they we'll get into a little bit further down here. One of the things that I was actually a little bit disappointed with, though, is cloud right here, 12%. Now, the cloud growth, they are actually EBITDA positive in their cloud, which many other cloud companies aren't. But the cloud growth in China is not really anywhere close to the other developing, kind of cloud enterprise companies. You're looking at Microsoft Azure, Google Cloud, AWS, all growing like 30, 40%. I mean, just
Yeah.
absolute insane numbers. However, the Chinese cloud providers, I think, are always going to be hampered by being Chinese cloud provider. Yeah.
By
You get
government?
what I'm saying? Because there's always going to be a lack of trust with the security of data when it comes to Chinese companies. Unfortunately,
Yeah.
I think they're never going to grow at the same rate as an American cloud provider would.
I agree. I still think it should be higher than 12 though. I would have thought like
So
15 or 18 or something.
yeah, so 12% matches the same growth that Tencent saw with their cloud, who's like the number 3 cloud provider in China. Um, Alibaba actually in their notes did talk about how they think their cloud growth would have been closer to 15% if it weren't for, unfortunately, this basically what I said, regulatory kind of people having to stay away from Chinese as their cloud providing company, as their
Right.
country of origin. But it's still pretty respectable growth across like multiple business segments here, including the K-Now logistics, local consumer services, where they're moving a lot more into this sort of grocery supply and like more day-to-day contact, which is great because I think you have an opportunity to build this high touch kind of interaction with your clientele, and that's how you get the 1.3 billion annual active consumers there.
Yeah, that is a lot of consumers.
Yeah, absolutely ridiculous number. When you look at the non-GAAP earnings here, they were down 23% in terms of their actual earnings, though, which is not something you like to see, unfortunately.
Ooh.
Yeah.
Why?
Yeah. Great question, actually. I think, let me see. Okay. This is the slide I wanted to talk about it on. So breaks down what their costs are. And if you look at their costs for the actual cost of the revenue, look at the difference between 2021 and 2022. So their costs went up about 5%. Part of that inflationary pressure. The other thing too is that the kind of the mix of where their revenue is coming from was less than ideal in that they're unfortunately selling more direct to consumer, as in Alibaba being the actual seller of the goods, as opposed to earlier Alibaba days where they were more just the provider of the infrastructure. Right, there was another company that was doing the order fulfillment,
Right.
but they were using the Alibaba website. So that's a higher profit kind of business venture than it is being the direct seller. Amazon is kind of like doing the opposite, where they were the direct seller, and now they're transitioning more and more towards being more the platform. Whereas Alibaba, unfortunately, through their revenue mix, has kind of gone the opposite direction, where they've become more the actual seller than the platform provider.
Do you think like logistics or any, I guess, increase of the cost, like delivery trucks, all that stuff?
Yeah. I mean, they are definitely very much, I would say, innovation focused. They do the same thing where they have like the tiny robots in the warehouses and stuff like that, moving stuff around. They've been building out infrastructure. They built a big K-Now built a thing in Liège, Belgium. So they have like a European footprint now as well for like their distribution network, which is expensive stuff to develop,
Yeah.
and they have been investing in that over the years. The other thing that you kind of notice here, too, if you look at sales and marketing, 11% to 14%. So they've actually had to start spending more as competition has intensified in China for consumers. So they've had to reinvest in more in their business in terms of sales and marketing, and they're dealing with kind of higher pricing and kind of a poorer mix in terms of where their revenue is coming from. So that's the reason why the profitability is down a little bit year over year.
So the reason why their profitability is down is not because of anything you just said. It's not about facts or figures. It's because they don't have a cool drone airport. That's what you need. You need a drone airport like JD.
True. I know they're working on that last mile delivery, as they talk about. I guess 50% of logistics costs are related to last mile delivery. So they actually have these little robots that like drive on the side of the street and they can deliver packages that way. I've
Nice.
seen the Nuru ones for Domino's Pizza in like Austin, Texas, or Dallas, Texas, somewhere in Texas.
Of course they do.
Very similar kind of idea.
All right.
Yeah. All right, but that's pretty much the majority of what they're seeing as far as their cost increases. They've actually done a little bit better in terms of keeping the general administrative costs down. A little bit in the product development, but nothing super 1% fluctuation year over year is nothing I would really worry about. So when we look at the actual income here, this is what we're looking at, that 36 billion RMB in loss for the most recent quarter in terms of investment income. Not a great number.
Jeez.
Yeah.
Do we know? They don't tell us which one. I'm gonna say
it doesn't
Neo or
say.
XPEV.
Yeah, just says year-over-year increases in net loss quarter ended March 31st, 2022, primarily attributable to increase in losses arising from decrease in market price of equity investments in publicly traded companies. That's all it says. Which publicly traded companies? I don't know.
It's XPEV and Neo. They're trying to get on that electric car rush.
Hey, well, that was one of the stimulation, market or economy stimulating things that I talked about today is approving of 40,000 additional vehicles being sold in the city of Shanghai and giving extra tax breaks towards EVs. So that if they were truly investing in electric vehicles, maybe that would benefit them. But we'll see. I don't actually know that. $1 million.
I actually didn't mean to hit that.
I mean, it works. This is a lot of numbers on here. So that was pretty much the main thing I wanted to highlight from here. They're getting better with the share-based comp. This is actually some money that came back from Ant Group, which was a nice bonus, I guess, if you will. So that their share-based comp expense was actually like a net negative for the quarter.
Emotional damage.
Previous ones. Cash flow, where the money meets the road, right?
Wait, say that again.
Cash flow, where the money meets the road.
That's what she said.
All right, having a lot of good time on these buttons here.
I was talking about this kind of reinvestment that they're acquiring in the business, this CapEx. Look at the increase there, 50% increase in CapEx year over year.
Yeah. Whoa.
But
share repurchase. Move your arrow there.
Yeah.
Ooh, look at that.
Big number. 10,000% increase.
They're disgusting.
Just loading the cannon up as the stock price went down, which is exactly what you want to see a company do if they're truly interested in preserving, kind of capital purchasing power for shareholders, right?
So they bought 119, obviously not individual shares. It means like 119,000 or something shares in all of 2021, and already have in the first quarter. That's gross.
So this is in renminbi, the currency there. So. Yeah.
My dogs are barking. Sorry.
Yeah. Basically, the amount of money that they're spending has gone up significantly. That's what this is actually denominated in, is in the Chinese currency. But yeah, they're spending a lot more on both share repurchases and reinvesting in their own business, which is very reasonable considering the fact that they're getting their kind of margin squeezed a little bit. So it makes perfect sense to me. I did actually run some numbers on the full year free cash flow, and I'll show you those in a second here.
Next year, there's going to be a giant decrease in the share repurchase percentage because they can't do that again. That's ridiculous.
Oh yeah, the percentage definitely. In terms of how much they have left, I want to say that they've used about 15 billion of their authorized $25 billion share repurchase. So they have another 10 billion or so remaining. They were buying back shares at roughly the pace. I think it was about $2 billion US dollars per quarter as of right now. This is what their cash balance is still looking like, though. They still have $54 billion US in net cash position on their balance sheet, so they can afford to continue to be repurchasing shares.
So they have 54 billion in cash, and their market cap is 250 billion around.
Yeah, very good. I actually am about to talk about that.
Oh, nice.
So did the math in terms of free cash flow multiple here, but 252 billion market cap, $54 billion net cash, $198 billion basically is what the enterprise itself is worth. And if you look at their trailing 12 months free cash flow, which was about 14.76 billion, a little bit under 15 billion, so that's a free cash flow multiple of 13.4. which gives about 7.4% free cash flow yield, meaning every dollar you invest, you're getting 7.4 cents back in terms of how much they generate. Yeah.
That was a perfect hallelujah button. I've never gotten to use that button. I thought this was the appropriate time.
Yeah. I mean, Jim Cramer would approve. I
Nice.
totally agree. Actually, I don't really know what his position is on Chinese equities at this point in time, but still impressive. I mean, I'm still happy to continue being an Alibaba shareholder, but nothing is kind of black or white or perfectly good or evil is always the way I look at stuff. But they're still doing relatively well. Okay, I'll leave it at that.
I think there's still. I can't really think of anything just free cash flow wise or any guidelines like that where this is anything that's a better deal in the market. I feel like Baba, I can't find anything that has the same ratio.
Yeah, I mean there are other things out there. Like I think when I looked at Molson Coors is around a 10% free cash flow yield, but there's nothing that's going to have the same
This much growth
potential and
Yeah.
be selling for such a reasonable valuation. That's where I think they are a nice intersection still.
Yeah, I mean, like Intel's PE is like 4 or 5 right now, but I still don't like them. It's still too high.
Interesting. Yeah, I'm not really sure what their free cash flow yield is right now. But this is like a segment by segment breakdown of all the different businesses. The Chinese commerce is the big one, 8%. Now, international commerce, they actually talked about that being down a little bit in terms of growth because of the whole kind of global what's the word I want to say here? Not inequity, but confusion, I guess. The whole Russia-Ukraine situation, because Russia was actually one of the larger markets that China was Alibaba was participating in outside of China. Yeah,
I liked watching you trying to get around that global confusion. All right.
I know how it goes. In terms of that whole Ukraine-Russia thing, they actually laid off like 40% of the workforce in Russia. Alibaba did.
Really?
Yeah. Like
All
I said,
right.
Russia was one of the larger markets. So the fact that they were still able to grow their international commerce, 7% is not like great when you're talking about a growth segment of your business. But given the fact that there was so much disruption during the quarter, I would give them some credit with that. This is, like I said, local consumer services where they go in the groceries a lot. K-Now Logistics, the logistics arm, still growing there as far as like actually doing that delivery of their packages. And then 12% for the Ali Cloud, which is actually the only other segment other than their core commerce, which is EBITDA positive, which is it's nice to see that they're positive, even though they're not growing the most aggressively compared to other segments.
Is that $38 billion market securities loss under innovation initiatives and others?
I'm not really sure how they classify that under the segments here, but it is something that they look at in terms of marketable securities. It was on their profit and loss statement. This is just kind of segment by segment analysis. But that's pretty much it as far as the actual points I wanted to make. What do you think? You change your position about holding Alibaba shares?
So I would buy more. I just can't because I have too many. I think I have there's a lot of other deals that I'm looking at, especially after this market just went up on a fake breakout. I'm calling it again, by the way. I've called the last 2.
Nice.
I think that if I was to buy more, I think I can get it cheaper. And more importantly, there's other places like Target. Like if Target hits like 125, I would rather have Target. I think Apple could hit like 120, even maybe 115. I'd rather have Apple. So I don't want to increase my position. I'm happy with it. I think we're good.
Yeah, I'm in the same place. I'm happy with what I have. I am adding still to Facebook, and then other video I can attach here to Google. Is another one I just started this week, and then I'm going to continue trying to hopefully add to that.
Yeah, I'm scaled in.
Dropping.
I'm scaled in at Google at not a good price, so I gotta lower that a little bit.
Okay, well, hopefully it keeps going down, man. That's a company I'd love to own, but you just got to get it at the right price. But yeah, I kind of agree. I'm actually going to. So I did sell a covered call that went into earnings. That was good. I made a little bit of money back on that because it didn't break through 100 a share. I'm actually going to sell the 100 call going out June 17th. It's actually selling for like 270 right now, which is a pretty aggressive number. and it's at about 30% delta. So, but I think I'm okay. Like I suspect the market is doing like a fake breakout. And I can't see the stock continuing to rally. I think it's going to trend flat for a little bit again.
See the video tomorrow. We're releasing that.
All right, guys. We'll catch you on the next one.
But later, guys.